Happy Wednesday, everybody. It's Dean and Armin here. We're ready for another webinar live from the new Kernel HQ in Auckland. We've got plenty to cover tonight, covering new funds, features, platform, and product. Talk a little bit about what's going on in the markets, and obviously today's OCR announcement, and then plenty of time to cover off Q&A. So can already see a lot of comments coming through in the chat section. Just keep firing them through. We'll try and answer them when we get towards the end as well, and anything we can pick up as we go. So happy evening. Ready to go, Armin?
Let's go.
So covering a few bits today. Going to look obviously at the recent funds that we've launched and how they can be used for you as an investor, what they may mean. Looking at a bit of the overall platform changes that we've got. Armin's going to talk about product features, so what's on the roadmap. And then we'll get into a bit of a market outlook, and critically, most of the time spent for a Q&A. So keep sending in the questions. Look, it's been a pretty crazy period of growth for Kernel, and obviously on the back of that, we've seen a lot of feature requests and demand, which Armin will pick up on, and how we can help support you guys with your investing journey. But want to say thanks to everybody who's come on board in the last quarter. We saw an 86% rise in signups on last quarter alone, and very quickly passing now 60,000 Kiwis that we're supporting across the country with their investing and savings. So look, thanks again for being part of the journey. We do really love the feedback, questions that you have coming in, so that we can keep making sure we prioritize the things that add value to your journey. And obviously one of the big things that people are coming for is KiwiSaver and investing, and our diversified funds have historically been the sort of go-to for people, particularly within KiwiSaver, where investors are after that set and forget. But often we also see people investing into buckets. So they may have an allocation they're looking for the long term, and then some short-term allocations, and they'll be blending across our risk profiles. Our focus on evidence-based investing, low cost, tax efficient, is really paving the way for our customers. And we're very proud that while we don't focus on short-term results, and 3 years is a short-term horizon, particularly when we're thinking about like an equities fund, the latest Morningstar results to the end of March for our KiwiSaver performance has seen us have #1 across the board. So yeah, pretty proud about what we've been able to deliver for our customers. And as a result, also, we've seen significant growth in inquiries and customers signing up. And that means that there are a lot of questions flooding into our customer success team. So I do want to give a massive shout out to our entire customer success team. They work tirelessly to try and support our customers, you guys, the questions you have, trying to make your onboarding experience as efficient as possible. But a big shout out to acknowledge right now that we are behind. We are aware that there is, as you can see, a massive growth in inquiries. That means our response time has slipped a bit. We're working pretty hard to address that, both in terms of new hires that we've got coming on board to support team directly, more investment into automation and our onboarding experience. So we are full focus on this problem. So appreciate the patience when you do reach out. If you've got a query, please just acknowledge that not quite where we want to be, but we're working pretty hard behind the scenes to try and get back to the standards that you guys deserve. But I guess on that note, we are hiring not only within our customer success team, but across the entire business. So we know there are a lot of people who are customers who also want to come and join us on this journey and building Kernel for our customers of tomorrow. So if you are interested in coming along and being part of Kernel, please have a look at our careers page at the bottom of our website. There's a link away there. There are 4 or 5 roles open at the moment, but we've got more that will be coming. So for those that are followers and also want to be part of it from the other side, keep an eye on that careers page.
Totally. And if you're waiting on a response from us, sit tight. We are hustling to get back to you ASAP. So yeah.
So we launched a couple of new funds recently, and look, it's fair to say Kernel has a pretty ambitious vision about how we think technology is going to change the way that you guys invest and manage your wealth for the long term. We're at the very early stages of that. There is a lot happening in financial services. You'll hear a lot of chat about things like tokenization, and obviously customers are also changing the way that they want to invest in the brands that they partner with to manage their wealth over the long term. We've also got AI, which means that not only is that enabling us to build things faster, but it also changes the way that you may want to interact and query and engage with your own wealth and the sort of insights that you want. So we're pretty conscious of that. We've got a pretty big vision that obviously some elements we'll start to share with you, others will make more sense over time. But one of the things that we've done recently is look at, well, how do we keep providing the most value possible to our customers? And for that, we obviously know that, look, fees compound over the long term. And what we want to deliver for our customers is really strong value. And so the Total World Fund and our Pi savings account, what we've done is gone, actually, if we can put those behind one of our paid plans, that enables you to have a much lower ongoing cost of investing. So as you would have seen, our new Total World Fund has a fee of just 0.12%. But because we're able to have that on a monthly fixed plan, that kind of is designed to try and cap or reduce the higher fees over the long term for you. It also means things like our Pi savings account, we've been able to offer within a fund structure with the Pi benefits an on-call savings rate that has been 2.25%. We'll come back to that rate soon. So we think for investors, actually, this makes a lot of sense. And we think that actually what you'll find over time is that flexibility and lower ongoing costs will mean more money in your pocket. There are also a lot of other things we're going to be building into the platform. So really aware that right now, this is a pretty first cut of what we want to provide value for. For investors out there, what we also know is that a lot of you are starting to use our direct US shares function. The reason I say that is the de minimis changes, which we'll talk to later, means it is quite tax efficient to do some allocation to offshore ETFs first as well. So look, obviously appreciate slightly different fee structure, but we do think it can make a lot of sense, particularly when we add more of the features that we've got planned coming up down the line. In terms of the hard numbers around this, it really does come down to investors. But click through, I'll talk through some of the examples, but it's been 2 weeks in, we've been pretty staggered by how much growth and demand there has clearly been for these products. There's been over 23 million that has come through into the funds in the first 2 weeks, and obviously strong average balances. And I think that average balance talks to the real use case about how to think about the funds and managing your wealth. So we've run some numbers to give you a few examples about what does this look like. For us, obviously, the benefit of the plan structure is there are no transaction fees. So with the Kernel funds, you don't pay a fee to buy or sell to regularly invest. There are a lot of different scenarios when it comes to fees. There is no perfect model for every single customer, but we've tried to strike a balance that gives a lot of flexibility. So that means you can make a one-off investment. It means that you can regularly create an automatic investment plan. Maybe you want to be building up some short-term savings goals while also investing for the long term, and you can do that in a really fee-efficient manner. I think the big call out here also in terms of that flexibility, I have no issues at all, and the platform is designed to be fully functional, that you can sign up to a plan for a month, make one investment, and leave your investments in there. So it is up to you in terms of how you want to manage your wealth, how you want to optimize it for the long term. We've got a full blog that breaks down how to optimize your investing and savings journey with Kernel. We'll be publishing that soon. That'll give you a few more insights and tips and tricks to think about how to maximize the use out of Kernel. The last thing I would sort of call out here, like investing for the long term, that's ultimately why a lot of people are looking at a Total World Fund. It's a global diversified fund, it's equities, it's typically designed for a 10+ year holding. I do think people probably overestimate how often we think that we may change. You see people going, oh, I'm going to hold this for 20 years. Now, that's always our intention, but life is not a straight line. And I think what we've seen in terms of our customer database and behaviors is that often there are surprises along the way. You may be 20 or 30 now thinking, I'm going to invest for this and I don't want to sell it for 30 years. But you may find at some point you're having a child, you want to upgrade the house, you have a medical event, your risk tolerance changes, you decide to move overseas. Things do happen. And I think what the fee flexibility of our model is that because there aren't those transaction fees, it means that you can change your investment strategy to suit your investment horizon and goals at any point in time without incurring large transaction fees. So we think that's the flexibility of the model. We're trying to make sure that the idea of our platform is it's your partner over the lifetime and that you can adapt it and personalize it to the moments and events and things that you're trying to achieve in your life. So a bit of flexibility there. We've got more to come, so watch this space. Big question, tax leakage. Yes, as you can appreciate, this is a fund that's diversified across 10,000 plus securities. And for our team to go and buy all of those securities means that the fund has to be relatively large before we can do that efficiently and have full replication. So you'll know with our other funds, we talk a lot about tax leakage and how we want to solve for tax leakage and deliver good index tracking. You'll see that with our other global funds, our Global SG 100 infrastructure, we're buying and holding underlying companies. So that's a big focus of Kernel. For now, there is tax leakage. We estimate it's in the region of 12 basis points. This does fluctuate, but that's sort of the tax leakage that is unrecoverable because this fund is wrapping up a Vanguard Total World. But naturally, the faster the fund scales and grows, we will have the ability in-house to be able to solve for that tax leakage and move from an ETF to a direct replication once we get the right scale. So expect to see that solved over the long term as well when you're thinking about any of your own calculations.
Nice.
Moving on to the save, we've got a couple of savings options when it comes to Kernel, and again, different use cases. You'll know that we have an on-call savings account called Kernel Save. We've also got a Cash Plus fund, which has some fixed income instruments, so short-term debt. That is several days to get out, a couple of days to get out of that. It's got a yield rather than interest rate. And so it does fluctuate ever so slightly, fractional, but over time, positive trend. The Kernel Save is a straight on-call account sitting with a New Zealand bank that is covered by the deposit compensation scheme. What we've also launched is a Pi version of that. So again, on one of our Plus or Premium plans, you can now access a Pi structure of that account. Now that's not covered by the deposit compensation scheme, albeit it is held with a major bank. But what it does give you is a lot more, gives you better potentially net returns if you are an investor on a higher tax rate. And I think we've run the calculations on the next slide. So this is a quick example. Like if you're on a lower tax rate, so a 17.5 or a 10% personal tax rate, there won't be as much benefit for you going on to a Pi Save product. But if you have a tax rate that's higher than 28%, which is the capped tax rate under the Pi regime, you can see how your effective interest rate is higher. So for savers and investors who are on a higher marginal personal tax rate, Pi Save may provide you benefits in terms of your total net return that you receive after fees and tax. So easy calculation, have a look and see what makes the most sense for you and how do you want to optimize those plans.
Yeah, sure. So we'll start talking a bit about the platform, but ultimately all of these features and products come together to compound and build value into what is our membership tiers. And so the platform, or the direction we're taking is a platform that doesn't just hold your money, but it's one that grows with you and helps you grow. So really we're trying to build a platform that understands how you want to manage your money and then responds to that. And then in the future, hopefully, helps you to take action. And so I'm going to talk about a few of the features that we have coming up and some of the changes that we've made in the new dashboard, which went live a couple of weeks ago now. And I want to give a big shout out to everyone who has fed back on the new dashboard. We've had literally thousands of comments, many positive, many constructive, and we are beavering away to fix up some of the small little bits and pieces that perhaps could be improved, but also plowing ahead to jam a whole bunch more features into the dashboard. I just want to give everyone a bit of history on the dashboard. And so before we updated it, the newcomers, you won't know this, but the old timers who have been with us for a long time, you will remember that our dashboard used to be organized by product. And so the way that we laid this up was horizontally. So we used to assume in the navigation that every customer would use every one of our products, funds, shares and ETFs, KiwiSaver and savings, and it scaled horizontally in our product. And so what we found was that customers simply weren't using all of our products, and for us to assume that they were probably wasn't the best call. And so what we've tried to do now is simplify the dashboard into one all-inclusive overview page where customers can pick and choose and organize their assets in a way that suits them. And so this is where we have a new feature called Organize, which means that you can organize your products around timeframes, goals, investment strategy, really anything that you like. And what this does, and there's a few questions that are already coming through, asking about things like insights, but what this will enable us to do is then provide a greater level of insight into the way that you manage your money. And so by grouping various assets together, we can then provide insights to show you various exposure, performance, and in time, a whole bunch of other things within that group. Now, there's another type of insight that we can provide as well, because we have retained the goals feature. And so if you are creating goals with Kernel, what we do intend to do in time is give you insights into how you're tracking towards your various goals and how these goals are interacting with each other. And so instead of our dashboard being horizontally stacked, it now becomes a bit more vertical. And then on top of that vertical, we can start to layer up insights and hopefully in time some intelligence to help you get towards those goals. Here's the feedback that we've received from you guys so far. So we've had a lot of positive feedback on the clean modern design. There's been a lot of positive feedback on Explore and making it easier to navigate and find things. And then further, we've had a lot of positive feedback about portfolio performance. And so one of the goals that we set out to achieve when we redesigned the dashboard was provide more performance. Performance has always been one that customers have asked for extensively. And so now there's various timeframes and a whole lot more ways to manage and view performance. And so if you choose to group assets, you can now see aggregated performance across that group and at the various timeframes that are within the graph overview page. So performance has been a big one. I do want to call out that we have had XIR performance within our funds page historically. We now have it across the platform. There has been a lot of feedback about XIR performance. I just want to say that we have always had this. It's now just become front and center. There's a lot of requests for simple returns, and that's something that I'm keen to hear from the audience about, whether they want to see simple returns or XIR. We at Kernel believe that XIR is the most important return to display for you to see how your investment has performed. But yeah, open to feedback. Want to hear about that one. So do jump in the comms or in the comments there and let me know if you want to learn more about it. But what we might be missing right now, and this is the part that we're working on,
a few people commenting. Yeah.
A few people commenting. Yeah, I'm not gonna say everyone, but there has been a few comments. Anyway, what have you missed? So there's a few things that we've had to do. So we have had to take a few steps, not backwards, but provide more foundational features so that we can then layer additional value on this in time. And so these things are things like, I'm just reading my slide. One thing that we've taken away is the ability to place orders before you top up your wallet. And so this is what we used to call a standing order. This is something that has been missed, and I didn't actually think it was as widely used as perhaps what the feedback has said, but this is something that we're intending to bring back, and we're hoping to combine it with something like open banking, where you'll be able to place an order beforehand, connect your bank account, and then place subsequent transactions.
Yeah.
Additionally, customers are looking for more flexibility over how they manage their overall aggregated balance. And so we're hoping to give people configuration ability so that they can separate KiwiSaver from that overall balance. They don't want it to be mixed and matched with their investments. Additionally, everyone misses the portfolio chart on the overview page. And so yes, this is something coming back, but we're just looking at what shape and form it comes back in. Now that we do have, like I say, XIR performance across all of your portfolio, so all products that you might hold, the shape in which that comes back on the overview page will be slightly different. So we're working to include all of these things. We just need to take a couple steps backwards so that we can bring them all back into the dashboard over the next couple of months.
I think like what Arm is talking about and some of the features that, I see some of the comments coming up on the screen about what you'd like to see come back is this is actually the direction we're going, or where we think this sets ourselves up and what it means for you guys as investors in terms of the long-term pathway. This is a much better structure in terms of integration of AI and real visibility and transparency about where your overall wealth is at. It just takes a lot of work, and it's a really hard problem to solve. If you think about, some comments on there about timing and dates, right? Yeah. When we're mixing a saving account that could be updated in real time with funds, with shares and ETFs that are in US time, we've got some complex problems to think about when so many of our customers are using all of the Kernel feature set. And so trying to aggregate all of these and bring them back together in a way that really tells the right, accurate story is a lot of complex thinking. But I guess we don't shy away from that. We're comfortable in saying, look, we know that we've sort of pulled back a couple of the features that you loved before, but we do believe that this is actually going to give us a much more powerful experience for you guys as investors. It just takes a little bit of time for us to pull it together. So things like your insights and the charts and everything like that, that is still on the roadmap that sort of Armin's talking about. We just got to make sure we deliver in a way that is really up to a standard that we think solves a bigger problem for the long term.
Yeah, totally. And coupled with the new foundations that we've built. And so we'll talk a bit more about groups, which is the next slide. And so you now can create a group. So if you go to your portfolio tab, there'll be a little button called organize. You can click on that. You can give a name to your group and then choose assets that you want to put into that group. This will then display performance across those assets that you've chosen to group. And so for things like insights, we're hoping to bring this back and then enable it on that group so that you can then choose to mix and match which assets you want to receive performance or insights against. We think this is really neat. We had a lot of feedback from the market about how they wanted to have more flexibility in the way that they manage their portfolio. And we don't want to be the ones who dictate to you how you should manage your portfolio, what view of the world you should have. And so this new model and the ability to group enables you to structure your portfolio and assets in a way that suits you. So I do encourage you to use that feature, give us feedback. And I'm seeing comments here as to my XIR comments. We absolutely think this is the way to measure performance. It's a perspective thing. And so for those of you who do want simple returns, there is a time and place in it for it. And so we can look to include these things. Moving right along. I do want to talk about our mobile app, which is in progress right now. We are launching this end of Q3. We're in Q3 now, this quarter, but we're looking for beta testers right now. 50% of our customer base is on mobile or logging in via our web experience on their mobile phone. And this was the catalyst for us introducing the mobile app. As this is going live at the end of Q3, we're looking for beta testers. So if you are keen to get on the Kernel mobile app, which is largely a replica of our dashboard with a few potentially new and interesting features, please do jump on. I believe that the team is going to post a link. There you go. Kernel Wealth has posted a link in the comments where you can subscribe and fill out a little screener, and we'll get in contact with you to give you an early release of the app. But the mobile app, like I say, it's going to be a lot of the foundational work that we've done on the new dashboard is to help us better bring the mobile experience to life. Again, if you've got this horizontal navigation and architecture, it's really hard to translate into a mobile app. And so by stacking some of our features vertically, it just becomes a whole lot nicer in the mobile experience. So please jump in and register. We're looking for all the beta testers we can. And we will be going live at the end of Q3. That's the mobile app. Headlines. We're going to talk about some election news, fifth tax proposals, and the mega cap takeover. So, Dean.
Yeah, look, keep your questions coming in as well. So one of the big things that we've heard, that has been included in the budget that's just waiting on the final legislative sign-off is the doubling of the de minimis threshold with your fifth tax calculation. So what is this? Why does it matter? When you buy overseas shares or ETFs in, say, the US, as you can with the Kernel direct feature, you have a capturing under what is called the Foreign Investment Fund tax regime. We've got a lot of information on this on our website, so please go have a look at the blogs. We've written a whole guide on fifth tax, what it means for funds, and considering what type of funds you invest in. But that's focused on above the de minimis. So the de minimis threshold was the fact that if you had a cost base of less than $50,000 in overseas shares, then you would only be calculating your tax on the dividends or income received. When you go above that cost base, then you have to calculate your fifth tax using one of the two main methods, which was the fair dividend rate or CV. Bit more complicated, potentially higher tax burden. With de minimis, there is a real opportunity here now where they propose or have proposed the doubling to $100,000. Now, this is per person. Just be clear that this is across all accounts. So it's not $100,000 in a Kernel account and then another trading platform account. It's $100,000 for you individually. Now, is this of relevance? Now, 50,000, we saw a lot of people probably not bother with buying direct shares or ETFs. $100,000 cost base actually starts to get quite meaningful. you think about a household, you could have a couple of $100,000 in your household now buying direct overseas shares or ETFs and only paying tax on the income. And that $100,000 cost base, you could leave to grow for 20 or 30 years, and it could grow to be $1 million or $10 million, and you're still only going to pay tax on the income. Now, when I run the numbers right now, say for looking at the US equities, then the S&P 500 yield right now, just to give you a sense of cost savings, if you take buying a US listed ETF versus using a pie structured fund, you're probably looking in the region of about 0.7 to 0.9% saving per annum ongoing in terms of tax. That's just based on the current yield. There's a bit more noise and obviously variability, but it just gives you a sense that actually the de minimis threshold is actually quite powerful. And so it is something that you may want to have a look to understand, okay, what is the role of buying some offshore ETFs first versus maybe using the pie funds? We obviously can't provide personal advice and we don't give tax advice, but we've got a lot of information on our website to help you understand how this works. And the benefit of the Kernel platform is that you can do all of this in one place. So it's super easy to understand exactly what you're holding and keeping track of your investments. So look, something that's gone through now, just to be clear, this does require the final legislative sign-off step to it before it becomes officially $100,000, but it does cover this current financial year. So it would be effective from 1 April 2026. So just keep that in mind. Obviously, we've got an election coming up, and we expect to see this being a big year for KiwiSaver discussion. We've already had a number of political announcements so far. I do worry a little bit that a lot of them are sort of around the fringes kind of conversations. But broadly speaking, I expect we're going to go into the election with a solid conversation around increasing contribution rates. There's probably going to be some questions around making KiwiSaver compulsory, which frankly, I'm not a big fan of. If you're not aware, actually, we've got a really high engagement rate with KiwiSaver within the employed cohort. So people who've got jobs, 95% of employees are actually in KiwiSaver and contributing. The problem with compulsion is that you may have lower income earners that are much better to be putting aside that 6 or 12% of their pay into debt or meeting day-to-day cost of living means than putting aside for the long term. So look, a few things to think about. And critically, also, we're seeing a lot of conversations around kids and getting kids involved in investing early now. This is actually probably the big focus for us this year, and we really want to see some positive engagement around this. If we think about what the government spends right now, the annual KiwiSaver tax contribution from the government, which has been cut down to $260 odd, is still costing the government in the region of $400 to $500 million a year. So if we think about that as taxpayers, most people who receive that are employees who are already contributing. So it's not really changing our behaviors around saving for the future. We could redirect that to funding kids' KiwiSaver accounts from birth or through to 18, and really starting to set up the next generation to be financially literate, thinking about how they save and invest for the long term, to see the practical benefits of compounding over 20 years. So look, we hope to see some positive news from and outcomes from the election. Specifically on the Kernel front, we have had massive growth in people trying to sign up for kids investing accounts, which we offer today. But what we are also working on for probably later in the year, and hopefully we can line up around the election results, is a kids KiwiSaver option from Kernel. So expect to see some more news on that. We'll keep you posted as we make development over the year.
Yeah, a little bit to work through there. It's coming though.
Yeah. We've also seen a lot of conversations around new, big, large, mega or ultra or hyper cap IPOs. SpaceX has obviously gone live now and had, a broadly positive IPO for those who are able to buy in at IPO. You've seen it rise materially and then started to fall back. We've got Anthropic, OpenAI coming up as well. I think when you look back at IPOs, I think it's always a bit of a be cautious. These things do tend to get a lot of hype in the build up to them, particularly with the names that we're talking about. But they don't always necessarily give the best outcome over the long term. And this is the challenge of picking individual stocks. we had a lot of questions come through about what does it mean for index investors. Each index provider has their own rules and criteria. FTSE, which sits in behind the Vanguard Total World Fund, and NASDAQ, which runs indices like the NASDAQ 100, all eased their IPO criteria to enable a fast tracking of SpaceX to be included in the index. And I think it was actually about 6 hours ago or so that SpaceX got included into the NASDAQ 100 index. S&P Dow Jones indices have not eased their criteria, which means it'll be at least 12 months before something like SpaceX would be included in stuff like the S&P 500. One thing I want to call out, I think there was a lot of concerns about what does this mean in terms of more concentration into the big names. SpaceX is a $1.5+ trillion company. Is that just going to dominate the size of, say, the S&P 500? Yes, that is market cap. It is based on the size of the value, but actually these indices have another actual screen that sets their weightings, which is called the free float. And so the free float is what percentage of shares of that market cap are actually readily tradable, i.e. publicly tradable and can be bought and sold on the stock market. For SpaceX, it was an incredibly low percent. I think it was less than 1% that actually was become tradable. So its inclusion in something like the S&P 500, if it was today, would be actually less than sort of 0.5% weight in the index. So I think a lot of people can get worried about, are they going to have their index fund now dominated by a couple of large IPOs? Because of the free float factor, it means that actually there's still a small percentage within any index that you may hold, but just something to be aware of. We've written a few blogs on this again, so do keep an eye out on our website, sign up to our newsletters. That's where we also publish more regular and up-to-date insights. And again, encourage you to reach out with questions if there are topics that you want us to dive into. Research helps us prioritize. So look, that is probably our fastest sticking to time, half an hour. Like normally Armin and I ramble off on a number of other topics. So, but it is a chance now to talk through any questions. So please feel free to use this time now, fire through questions that you have for either Armin and I about what's coming up and what we can help with.
And we do have the Money Month Breakfast event coming up on Wednesday, 5th of August. So expect a registration email to come later in the month, and give us a thumbs up if you'd like to come along to a hosted event by Kernel.
Yeah, I've completely missed this slide. Sorry.
Totally
yeah.
Fine.
Again, one of the benefits of our new office is it is a hub. It's designed to create this space that we can interact in person, hold events, be it education, meet the team events, etc. So first one's there. Do RSVP, get in quick, because it is pretty limited tickets, but we will do more. If you want us to do more of these in Auckland, outside of Auckland, please let the team know. Love to know how we can help and where you want us to come to next.
Yeah, definitely. Web Kiwi, I'm just going to jump in on your question there. Applied for kids accounts and told waiting 2 weeks. Yep,
Yeah.
We acknowledge that it is a long wait time at the moment for kids accounts. This one is a manual process, and we have just been inundated with literally hundreds of kids account requests. Sit tight. We will absolutely hustle to get back to you. We're doing everything we can.
Yeah. So yeah, look, again, that was sort of acknowledgement to the growth that we've seen and everything that's coming through. We're ramping up our hiring, so we'll keep working on that. And Armin and the team have also already sort of been designing out for sort of the more medium term how we can do more digital onboarding of kids accounts and make the whole just self-serve experience that much easier as well. So
yeah, totally.
Appreciate the patience with it.
That's right. A big part that we are focusing on as well is multi-account experience. And so once you have those kids accounts, how they connected seamlessly to your parents' account, you can manage that all within one login. So yeah, there's lots of stuff happening in that space. We think we're onto a good little experience where you can manage all your accounts under one email. So yeah.
Are there any tax obligations if you're in the PI, or is it all sorted? All of the Kernel funds, so the Kernel investing funds, PI Save, and even Save, they're all tax handled for you. We calculate and process the PI tax on your behalf, and so this goes off to IRD, so there's nothing that you need to do. And because Kernel's funds are unlisted, not exchange-traded funds, like the New Zealand ETF, that means they are taxed at your exact PIR. Again, we've talked about previously that New Zealand listed ETFs are actually taxed at a fixed 28%. So if you were on a lower rate, you're going to have to do some tax filing to try and claim back some credits at the end of the year. So all taken care of. For the direct shares and ETFs, we give you the data that you need. It's a bit harder because obviously things like the FIP obligations, if you do have a cost base that is over the de minimis threshold, then we don't have visibility to know what other holdings you have across platforms, because that's done at your personal level, not a platform level. Armin, USD transfers, things on the radar. I'm going to dump you in for what's coming down the line.
So no, you can't transfer USD to a USD Kernel wallet, though we are working on including a USD wallet into our shares and ETFs product. We obviously have a local currency trading environment at the moment where you're trading in New Zealand dollars, but we are expediting the introduction of a USD wallet to give our customers more control. We have heard from all you lovely customers that you are wanting more control, and this would enable it. So yeah, that's on the horizon and coming very soon. But no, to the question that's in the comments, that you can't transfer USD directly to Kernel. You would have to go via the wallet in NZD, and then yeah, do a FX transfer into USD.
And on the back of that, even though we can do some ad hoc, like that would also mean that we can more streamline things like being able to transfer into Kernel, not only currency, but your shares and ETFs that you may hold on another trading platform. You can move it across without having to sell.
Yeah, that's right. We could perform after that an ACATS transfer where your USD would be transferred in full to your USD offering.
There are some platforms in New Zealand though where it's not in own name, and so actually you hold a pot, and that means that it's not a restriction from our end, it's a restriction from their end that you can't transfer out to us. So on that basis, you would still have to sell down before you could move everything into Kernel.
That's right. And what age for kids accounts? It's anything under age. 18, but any age. Yeah, 18 is the cutoff, and then it becomes effectively an individual account. Anything younger than that is considered a kids account.
OCR today, we actually didn't even touch on that, but yes, we did have at 2 o'clock today a rise of the OCR to 2.5%. So you will be receiving a notice on that. Expect tomorrow morning, going out confirming the changes across both PiSave and the On-Call Savings account. So while PiSave is new, look, a healthy interest rate for you to sit there for your short-term savings goals that you may have.
Yeah, totally. Do you have any plans to add ETF DRAM? I can look into it for you. I don't know. But yeah, we can look into we're open to all ideas. So please, if you've got an ETF or a particular stock that's not listed on the platform, send it through. We'll consider it. We're generally considering any ETF that's coming through.
How are returns with Cash Plus versus Cash Pi expected to compare? So good question there. So the Cash Pi is short-term things like term deposits, but it also holds short-term sort of debt instruments. And so it's a yield. Now, if you go to the Cash Pi web page on our website, fund page on our website, you will find the current yield. Now, the yield is not the only return. You can also have some capital appreciation or depreciation as well. So what you want to do at the bottom of our fund page is open up the fact sheet. The yield is a good approximate for what you may receive at the moment in terms of where the total return profile looks, and that's shown as an after fee basis. That number does fluctuate day to day, right? It's not a set interest rate. But have a look at the fact sheet at the bottom of that fund page. It will give you a bit more insights to what's in it. So this is probably a good alternative for sort of maybe the short to medium term goals that you may have, whereas the Kernel Save and Kernel Pi Save are a bank account that is paying an interest rate, and that interest rate is published and then subject to change, typically tied to when there is an OCR change. So have a look at that. Probably a good reminder and shout out there that if you do go and look at any of our fund pages, that the fact sheets at the bottom of the page are a really good tool to find a bit more deeper information. You can see the holdings, the sectors, historical returns, risk profile, etc. So if you're wanting to dive a bit deeper, understand what's involved, have a look at the fact sheets. Gives you some more insights.
What else have we got there? Maybe
cover that one.
Scroll to the bottom. There was a comment actually, which I'll just jump on. Someone said, can you please bring back the as-at date on the portfolio? I just want to call out that the as-at date still exists. It just exists at the asset level. And so we did used to call the asset level as-at date out at the overview level. It's actually just a bit harder than doing that now because we do mix KiwiSaver, shares and ETFs, savings, and funds all into the one page. And so now what happens is we update the as-at on the individual asset itself. So yeah, do find the individual asset, click on it there, and you will get your asset day that still exists.
We don't have rewards cards linked, but one thing that you guys may want to have a look at as another friendly Kiwi fintech is a company called FeedJoa. So, you know, there are a lot of challenges with cards in New Zealand, and the rewards rates and how they change, the compliance burden. I'm not always convinced actually that it pays off for everybody, but there's a great Kiwi app called FeedJoa, and what FeedJoa enables you to do is through your IRD number, link your current spending cards. So you don't need to sign up. You can just link your everyday banking and do a roundup into KiwiSaver. Or you could actually allocate that to a child or a grandchild. So your grandparents could sign up to FeedJoa and have that connected to the everyday spending. And every time they go shopping, it could round up 50 cents or $1 into their KiwiSaver, their kids or the grandkids' KiwiSaver. So that's a really great way to have an independent rewards or roundups feature that doesn't matter where your KiwiSaver is or what spending card you are. It just has that in the background kind of compounding effect going on. So check it out. You know, I use them personally. A great way to just have a little bit extra going into your KiwiSaver every year. Useful as well, maybe if you're a self-employed, so that you are getting your government contributions. So.
Yeah, definitely. Kirsten, might you add access to London Stock Exchange? Yeah, the addition of the US or multi-currency wallet that we're looking at is to look at additional markets.
Yep.
And so we are looking at things like the London Stock Exchange and various other exchanges, ISX, NZX. So yeah, we're also looking at local markets as well. So NZX and ASX. But yeah, we're looking to introduce more optionality for the shares and ETFs product.
Somebody talked on about rebalancing. Do you want to talk about changes like both KiwiSaver, but also like, how people think about
totally.
rebalancing?
So, yeah, rebalancing can be used for various bits and pieces. When it comes to KiwiSaver, you can rebalance your portfolio two different ways. You can either rebalance your entire portfolio, so that's all units that you own in any funds. You can reallocate them to a mix of any other new funds. We've introduced a new option recently where you can rebalance all future contributions. So your existing units owned, they will hold their position, and then any future contributions that you buy going there forward would be into your new strategy. Or that's how we rebalance KiwiSaver. As for rebalancing your invest portfolio or investments, the only way to do that is manually at current, or with forward contributions purchased through the auto invest feature. We are talking about introducing rebalancing so that you can build your own model portfolios, if you like, within the invest feature, group them as you'd like, and then be able to rebalance them at set triggers. So these are things that we're talking about. That's why we've introduced groups, because it does create the ability for us to do that downstream.
I'll rattle through a few here just so I've got on the screen. Will we add the Total World Fund to our KiwiSaver as sort of covered in our little hot reels? We knew that would be the most requested. Right now, we're pretty focused on just getting the fund scaled and building out the features on the platform. But we have understood what the requirements are. So a future problem that we may look at. Will you add NZ shares and Australian shares? Yep, that's on the radar. Already actively exploring this. A few things we want to build out first. Can you repeat the tax? The tax rate for all Kernel accounts is 28%, right? No. So the Kernel funds are multi-rate pies. So if you're on a lower tax rate, they will be calculated at 10.5 or 17.5%. It's done automatically. You don't need to do any work with the IRD at the end of the financial year. Where I said that there was a fixed 28%, that's for New Zealand listed ETFs. Now, we don't have them on as a platform, but if you're buying an NZ ETF that's listed on another trading platform, New Zealand ETFs are taxed as what's called a listed pie, which means they're taxed at a fixed 28%, which means if you were on a lower tax rate or you're investing for a child, then you would have to do some tax claiming. And that can get a bit messy if you don't have any other income, say as a child, to use those tax credits for. So in summary, the Kernel pie funds are multi-rate, which is why we decided them to be unlisted rather than listed on a stock exchange. And it means that all of your tax is handled automatically. Same for the PieSave, by the way. The PieSave is also at your multi-rate. do we plan to work with Feature in the future? Look, we're close friends with the Feature guys, have known them since launch. I think, you know, they're a great team. They're based out of Wellington, but come up regularly. And I think we're seeing a couple of them next week. And so you've been speaking to them. We're always keen to figure out how we can support their journey and help ultimately the ecosystem here, because, you know, these are some great features that we can all build together to make long-term saving and investing, you know, really easy and compounding for Kiwis. Any plans to add world EU accumulating ETFs? Look, that would be part of there aren't many accumulating ETFs, I don't think, really in the US. You do have to go through sort of the UCITS regime in Europe. So that's sort of where we would come into the expansion of the markets exposure and solving through that problem. The last one.
Stefan, it's funny you say that, because Dean asked me if we could add that fund today.
I'm pretty sure I was chatting to Stefan about this. And so yes, again, if you've got some ETF requests that you want us to add, we did have Advantis. I don't know why it got turned off. We originally had it. It has been turned off at some stage. We can turn that back on. There's no reason why it shouldn't be on. So that's cool. Access to Frankfurt Stock Exchange would be cool too. So just Stefan and others, just ping us back on the message and we can chase Armin and he can sort out turning those on and then figure out.
Or send me an email direct, armin@kernelwealth.co.nz.
Even easier.
Happy to take emails.
Yeah, and again, like we're here to hear your feedback. I think Armin shared it before. You can find us on LinkedIn personally. Our email, like armin@kernelwealth.co.nz, dean@kernelwealth.co.nz. I have no issues at all. Anybody who ever wants to reach out, drop us an email, drop us a message, feedback requests. Means a lot, so I appreciate it.
Yeah, totally. And again, all the feedback that we received over the last couple of weeks related to the dashboard, it's been hugely appreciated, good and bad. Constructive, maybe not bad. There's not been many bad comments, but a lot of diehard customers who have given us a lot of great feedback, constructive feedback as well. We do read all of it, and it does shape what our roadmap looks like and what we intend to build next. So yeah, really appreciate everyone who has taken the time.
Yeah, lots of great questions. We'll be doing this soon. And again, as a reminder, if you want to see us in person, let our team know. Do get in quick if you want to register for the Auckland event that we've got coming up next month, because August is next month. But otherwise, appreciate all the ongoing support, the growth that we've seen on the back of helping tens of thousands more Kiwis with their investing and savings journeys. Keep the feedback coming in, and we will be back online or in person very soon. So thank you for joining us on Wednesday night.
Thanks, team. See you later.